Okay. Morning all. Sorry, good afternoon. Slow off the mark today. Just see who's in. Just let me know if you can hear me okay. Seems to be coming through. Let me just check one other thing. It's not right. That could be right. People on TradingView, can you hear me now? Just make sure that's all good. Fantastic. G'day, Peter, Jason. Hope you're both well. Now we'll just get into it. So, John, how are you, mate? We'll get into it. I just want to chat about, obviously, with the Trump's his news, his well-timed news. I mean, you don't tell me he doesn't hold off until the start of the markets to get Asia kicking off, and that leads into a good rally into Europe and then US and stuff. So he's well and truly got a game plan there. Now I don't know if anyone saw that news. I don't know much about it, but the plasma they were talking it up. It was big. So I saw something on Twitter from his press secretary. I can't remember the name. The blonde girl was on Twitter saying a big conference. They were talking it up yesterday. So big news release or something, and then I saw it when I opened on the computer that it was kicking off this morning. So he's talking it up. So that's for them. I don't know what time it is over there, but it's what 7:30 in the morning, Melbourne time, Sydney time. So well planned before the Asian market kicks off. Looks like just trying to support it. But the actual news, the way they talked it up, and it was all great, and they the big hoo-ha song and dance. Reading about it, I think plasma's been around for a long time as treatments. And I don't know if it's not really a cure at all. It's just improves the chances of people, mortality rate by 30 to 35%, they're saying. But that 35%, I don't know what statistic that's from, and they have to hit it within the first 3 days. So, if you're mucking around and you go in there and you find out you've got, like, COVID-19 and you've been maybe for a week, maybe it's too late. So it's kind of like it could work, it could help, but I wouldn't expect that it's not the be all and end all in the way of vaccines. So to me, that's why I'm sort of expecting it's just big song and dance before the elections coming up. Because no one really knows about plasma. I mean, his constituency, if that's the word, I don't really think they'll be too concerned about the details. They're just looking at it saying, yeah, it's great. He's doing a thing. He's got the cure, all that sort of stuff. But whether it is or not, it's a different story. I think it helps out. But either way, I think the markets we all know the markets do not need much of a push to be bullish of late. It's just continuing that trend higher. And it looks like it's going to go up until the elections, which are in November or so. So we've got a couple of more months potentially of just a continued bull run. S&P, I think it pushed into new highs on Friday. I don't think it closed there though, and Nasdaq, continued to charge higher. I don't think the fangs, many of them were up. Some of them were down, but Apple was up over 5%, which was a good, key driver of that index, which is in turn a key driver of the S&P. So I was expecting to be a bit bullish today into the market open, just to see how that goes. So we'll chat about that. We'll look through just your key markets, obviously like crude oil got slammed and bounced straight back, I think. Copper didn't, which is kind of interesting. G'day, Pete. Is interesting. We've got what else we're looking at? So just look at the indices. Not much has changed, but I want to see what's happening in the US overnight session, which is now Asian session coming to Europe. What the dollar's doing. The dollar bounced back above 93 off that 92.50 level we've been talking about for a while. Potentially that's finding a bit of bullishness because if they say they've got a cure, that means everyone's going to be looking at it going, oh, we're back to work. If the market's going to be bullish, it's going to be that sentiment of, okay, we're going back to work. We're back out of lockdown. That's not going to be good for the US dollar for the negative term. And it'll be interesting. This is how everything's weighed up. Everything's been selling off because of rallying up because US dollar selling down, more stimulus now. If the US dollar rallies, it's saying they're probably not going to expect that stimulus. What will that do to the share market? Will it just, when people start to get caught between the bulls and bears, no one's going to want to add because it's going to bring in that I guess, what do you call, uncertainty into new buyers. And we're not worried about holders, we're worried about new buyers at the moment to keep it going. Now, if that uncertainty creeps in because you get a rally in the US dollar, you might get, obviously gold's going to you would expect gold to sell off. Anything related has been moving because of the US dollar, which is pretty much most things, is going to reverse if that US dollar starts to bounce because the US dollar put the squeeze in the shorts. Anyone holding shorts is going to be thinking twice, going, oh, maybe we've got a bit of a plasma cure. And they're not concerned whether it's a cure. They're concerned what the market reacts to. And if the market's starting to react to that as a positive step, and then, you've got Russia, whether theirs is good or not, coming out with a cure. You've got all the, I don't know, UK's, a couple of good steps forward, maybe in Australia as well. So if that's going to be the sentiment, I don't think that's going to drive the share market higher as such, because we factored this in. I mean, we well and truly factored it in. You would think there might be a bit of a try to attempted rally, but I think it might be by the rumor sell the fact. That's what I'm anticipating. But I mean, you're not going to know until things start happening. The problem is, if it happens on the downside, it's going to happen fast. So I think you've got to make sure you know where your risk is on any one trade, know where you're going to be wrong, and don't leave it too wide. Wide risk. So I think that's the key going forward, especially at these extended levels. I think the ASX is actually okay where it is, as in it's just hovering below that 62. Where are we? 61.19. So this is what I'm looking at. This is actually a 5-minute chart. Just hovering there. I mean, it could easily break out. It's holding these high lows, but that, not really conducive. Every time we popped up there, sold off, held a higher level, sold off, higher level, back up to this zone, 62, sold off. Another good flush out, pop back up, pull back, pop back up. I mean, they're getting bought up along the MAs. That's not the world's best trend, but it is what we saw coming up into the big sell-off, end of last year, start of this year, early this year. So same type of grind up. So our market's very lackluster, and it's traditionally lackluster compared to the US. US will be this sort of thing in reverse. They tend to bounce down, we grind back up, they go bang straight back up. They will be much more bullish. They're up or down. There's no sideways consolidation for the US. They don't believe in that. You can only make money going up or down. Don't really make it going sideways. So that's the way the market moves. Whereas we're happy just to grind out. But it'll be interesting to see whether, if we start to get up through 62, that's going to open up a move back up to the high, especially if the US markets are kicking on. Europe doesn't look so great, which we'll look at in a second. So yeah, there's a few things that we're looking at. Now I'll just go through quickly while I remember the action from intraday. So earlier on, let me just see. We're looking at this is the Dow. That's up at a key sort of a zone. You see, the Wall Street 30, which is the Dow based on the Dow futures. So just remember, I think we've had a few questions. We look at the SPY in the morning, the SPY 200. So I'll take all my charts off that now. I won't be looking at the ASX 200 because it tends to get different. It's different levels, as in the numbers, not so much the levels themselves. Like you might find, okay, that's the same level off here, but different CFD providers can provide slightly different depending on what they're using or how they. But really, the swing levels are the same. So you got to mark up. You start your same swing levels, but not use the levels I'm giving you. Say 28,005, for instance. This is the hang set. This is the Dow. Don't use that level hard and fast. Go, well, that's resistance because he told me it's 005. It may not be, because they might be slightly different, and you might get stopped in and out and chopped around. So try to use the charts themselves where the levels are and mark it up independently. Put your own sort of levels on there. So the way I trade, you don't need these numbers anyway. The way I'll be trading is a lower high. So if you see that level fail, who cares what number it is? If you get your lower high coming to play, then you're a seller. If you got this pop up and a pull back and retest in that zone, again, who cares where you're buying it? It's the high low we're looking for. Confirmation either way, down or up. It doesn't matter. It has to, which I think if people are looking for that number itself, they're putting a sell level at that number with the stop above, and they're willing to get in the market when it's coming up to that level. Now, to me, that's not proving anything. If you're going to sell it, I may have that completely wrong, and it just goes straight up and through to the next level, and you get stopped in and out without any confirmation whatsoever. So I thought I'd just touch on that from that question. Now, looking at this, the Dow, it's this previous zone. It's touched on there before, flushed it, backed off, good sell off, straight back up there. Found some sellers again, back down, pushed out through the lows, high, low in here, back up there again. So whether this is all the sell off and it's ready to go again and going straight up and through, but either way, it's a level where we've had some action before. So that's why I've marked up that zone. It is fluffing below it at the moment, and it's whether we get a sell-off into the European session, because the European session, last couple of sessions, the US has been finished positive, and Europe's been down. Even Friday, when they had a positive US session, I think before that, coming into the open, they were down again. They were finding some selling pressure, and they ended up down again on Friday. They did bounce off the lows, but it's still some negativity around Europe. So maybe the US might just be hanging around this level, coming to the European Open. Sorry, there might be another flush lower before it finds some buyers and lifts, but we'll see how that plays out. Japan, we had a buy on that just as we started to break through, and it was about 50, 52, I think. Entry was. So we were looking to buy around 22,950 for a push to 23, and it got to 23. It's done nothing since, but out of that trade, it's only short and sharp really. But the Hang Seng was the thing that ticked off, and it was holding this up, and it sort of got that market to really kick on. And once you start getting these, this is the ICT trade I talk about a bit. If anyone doesn't know, it's inside continuation. The trend is up, you got to push up, pull back, another pop up, you got a lower high come to play, but the higher low, and it's high low with the trend. When you break through this level, basically, it's what we call an ICT, inside continuation, and it's just a good show of strength. You got some sellers coming in, try to push it. They're soaked up at a higher level again. The trend up is intact. Just looking to lift off those MAs and expand higher, and that's all we were looking for. And I think we pulled out 50, 60 or so on the partial, and only 45 or 43 on the second. So that's okay. But in essence, that's still, we're lifting off these MAs. We're starting up at these levels when you're in this zone before. You're getting a bit extended up here. So we'll see how that goes. And it's starting to hold. I look at this 20 whole moving average. If it starts to hold below there, I'm sort of looking for that contraction or a pullback, you might call it. Now the Hang Seng, I didn't alert to this, but I did trade it. I had a couple of nabs in there long, and I think two small stops got chopped out twice before it started to kick off. So this is what I say about the Hang Seng. When it starts to go, you can tend to wait that little bit longer, so you're not going to get flushed. I mean, the first time I didn't wait, popped up through the high, I jumped in off the lower time frame charts, then stopped out because it just popped me in straight back down. I didn't get stopped out, so I took myself out as soon as I saw that weakness, because it was like, all right, if it's not going to go through, and this 5-minute candle is just not going to continue on up, then it's probably going to pause or something going to happen. It's going to roll over. Who knows? Then I did it again, did something stupid again. The second one was a bit dopey, but same sort of trade. You're waiting for it. You're trying to anticipate the break. So the third time round, off this candle, I think I waited for this candle to start. So as soon as we finished up here, and it looks like it was going, I was in 60 something points, and that was it. And that covered more than enough for that trade to cover the two losses. And there's another thing I do, which I thought I might just touch on while I'm speaking to you, is the my trading style lately, and for whatever reason, whether it's impatience, a bit of a FOMO, missing out a move, the first couple of trades, more often than not, are wrong. So I don't tend to put half as much as I can, half as much as I normally do on the first trade or two. And if you happen to get a kick off, then okay, so be it. It's not as good a win as it could have been. But the size I would put on for this maybe second, third trade, I tend to lift, especially as things start to become a bit clearer. For some reason, lately even, has been jumping in early on the first trade or so, and it's too early, and I'm getting caught in the flush occasionally. Sometimes you're just making a small gain, but it's in that flush, or it's in that chop before things start to become a bit clearer. And it happened. Now, where was it? I'll show the trade. Oh, here. Whoops. Same sort of thing here. Chop, chop, chop. And I think we were speaking to somebody about this in the forum, in the Discord channel, until it became clear. That was a clearer trade. You got longer term MA starting to creep up, shorter terms start to roll back up again, the medium term start to roll back up. You're sitting on top of the MA is what you want to see, and then there was that buying opportunity with that push up, and it really kicked on strong. So in there, took a couple of losses, made it back, plus a little bit more. Actually, only a little bit more, really. It wasn't much. In hindsight, it wasn't the greatest of trades. I didn't even hold it very well there, but you can see that there is when the outcome's becoming known. It's a lot more clearer in that section here than it was prior to that. There was nothing really setting up prior to. That's why lately I've just been, well, let's not put the full amount, was what I normally do on the first trade, because I'm probably going to be wrong. But once it becomes clearer, which was this, once we started to break up, we started to hold this candle, green candle, took out the previous highs, and especially when you got a level up here, say above 25, that you'd think with this move up, it's just going to extend into that level. More often than not, the Hang Seng Pix levels, it will just go target, and it's targeted that level. So once this candle opens, straight in, 60 point, nice, literally a couple of minutes out, done. So done for the day. So I thought I'd mention that. It wasn't something, because we had the Nikkei moving through our Discord channel. It wasn't an alert there, but it was just something I thought I'd touch on. Now, anyone that doesn't know about Discord, we're looking to do the intraday stuff. It's just a lot easier to put through there. So if you wanted to become part of that, just send us an email to support@tradesetup.com.au. I'll send you out a link, join in, and just see how it goes. Now, SPY was chopping around this level. I think it did say looking for a buy. It just didn't play out. I mean, once we got Hang Seng open and rally, there was probably an entry now for the lower time frame charts off the one. But really, you don't get much. I don't get that interested in the SPY when the Hang Seng's open. I think the Hang Seng gives you better moves, bigger moves, and when it goes, and you can really pull out a lot more than you probably can on the SPY. So I mean, the SPY is, it does work. It's you can read it, you can make some good gains, but I think risk reward tends to be more 1-to-1. Risk reward on the Hang Seng could be 2-3-to-1. I'm finding anyway. That's why my preference is the Hang Seng. I will alert to this occasionally, but the Hang Seng main focus there, Nikkei, or N225 is good. Dow at the moment, when we get some volatility pick up, I think we get a lot more action outside of US regular trading hours than we are just at this stage, because it seems to be doing nothing with the Hang Seng's moving at the moment. Whereas before, when the market was dropping, they were all moving. You can really pick out some good trades. So we'll go over now to where was it? I'll just go over to the key sort of indices we're looking at, and then we'll look at some shares. Bit of share action there. So that's the Hang Seng. Let's not worry about that. So we'll start with the S&P. We're on a 30-minute chart again. I mean, that S&P is still holding, but that's starting to flatten out a bit. It's looking like it's flat out. Now, if that doesn't kick off soon, I think that might start to bring in, especially if we move back below these MAs on the 30. So you can see it's pretty clear we're sort of in that range at the moment, chopping around. The MAs are up. It might do something like that, sort of flatten out and then go. There's no reason why it can't, but I think it's been targeting new all-time highs for a while now. But to continue on from here into new all, it's asking more from the market, especially when there's potential that there may not be, well, not that there may not be stimulus, there may not be as much stimulus as you think. Right? So the market's trying to decide what's happening at the moment, and also what does elections mean? What does potentially another Trump victory mean for the market? I don't think a lot. If he wins, I think it might be a surprise, but for the market, he's bullish for the market. I mean, his whole aim is just to keep pushing it higher and go. So if he wins, whether I don't think we get much upside, but potentially if Biden wins, it would be interesting to see how the market takes it. Whether they start to say, well, he's going to have different policies, let's sell off, let's just get smashed and take our gains off the table and see what he does. But I mean, I don't know how the market's planning to take it. I haven't really read up on the news, but either way, we've got S&P it's just hovering a bit like this, but it's not unlike this move. You can see we've got S&P pressured up, found some highs, pull back. So it had a pullback before we got this action where it hasn't really pulled back. It's just starting to consolidate. So that to me is not the best of signs. We may find we just get up to these highs, flush it out, and we turn around and roll. I mean, I don't know. We have to wait and see. If it starts to head down below these MAs and starts to come underneath a lower high, then that might target a move down through 33.53. But either way, I mean, we're still up. Not much has changed. Still heading higher. That trend is still up. Market wants to go there. It wants to keep plowing away into new all-time highs. We just see. I think it's obviously with this S&P, it's got to do a lot with the Nasdaq, and the Nasdaq is again, it keeps charging higher. And you can see from the open. Just get back to the open. Where's the open here? 11:30. The open on the Nasdaq bullish. That's when Europe was negative. So they've opened up. Where they closed, you brushed aside any negativity in the European session and plowed higher. 5% gain in Amazon, probably not Amazon. Apple probably helped. But you this sort of sell-off, bang, next candle straight up again. So anything, any bearish action is getting soaked up real quick into the Nasdaq. So if that's the case and it keeps charging high, I expect the S&P to be grind out new all-time highs as well. The Dow not looking so pretty. It's still going to get through these highs, and I don't know where we are in comparison to all-time highs. Probably still a way off. Yep, still a way off. But I mean, if it gets through these, say 2800, 28100 zone, this previous high here, it may be a new all-time highs again. Might be on the cards for the Dow as well. But that would be suggesting that the Hang Seng's kicking off. Not the Hang Seng. The Nasdaq's kicking off, and the S&P is still grinding out new highs as well. Now the US dollar. Looking at the US dollar, this is on the daily. It's that zone that we've been looking at, the 92.50, flushed it out. We bounced back above that 92.50 area. We'll just go down to the lower time frame. So you can see, I mean, it's quite clear we've had rally up on the back of, with the big sell-off in March, straight back down again. And that's when, liquidity was increasing. You're starting to stimulate the market, just throwing stimulus, throwing US dollars at it, sideways down, sideways down. For here, how many times, you're looking at that sort of move. Extension took us down to the, perfectly. So that's your secondary move. When you have two moves down, first move down, yeah, it could catch a few buyers off guard. Second time, it's well and truly written in the sand. That move down's on the card, so you're not going to really be too bullish on that. You're going to wait and see. But I think asking for a third move down, it's not the unknown. It's well and truly from the unknown anymore. It's the known. So I think, pros here, traders here, retail start to short it here, is my view. And if retail are starting to short it, they're well and truly, everything's been established on the short side already, and they're probably going to be fodder to be squeezed back out. So that's what I'm sort of looking for. This 92 level, still looking for that to hold. I don't care whether it does or doesn't. It's more like, what is it going to mean if it does start to hold, and how do we trade it? How do we trade around that? You can see that push up, pull back, retested that zone is a good sign. Starting to hold, so we probably could be looking back to 94. What happens if we start to trade the 94? Does that start creating some selling into equities? Your commodities are going to come under pressure. Gold's going to come under pressure. Gold's not looking convincing at the moment. So yeah, it's still the shorter term. We're starting to grind out. It just seems it'd be interesting to see what happens when we get to 94. If we start going through that, I think that's going to be a key level, that 94 zone, for shorts to be really thinking twice. And look, it could just come up here soon. If we start to get up there and it starts to take some time, we get up there and we start to break out of this downtrend, then you're thinking of two things. You're thinking sideways or up. You're not thinking of down move anymore, because you start to think whether there are going to be some longs squeezed out, some shorts squeezed out, and more longs coming in. But that whole action there is not convincing from the short side. And sooner or later, that's going to be less convincing for sellers to jump in, and more convincing to buyers, because you have got that fuel built up on the short side. They're going to probably want to start booking some gains sooner or later. So that obviously is going to affect the euro. Euro just swung around like in opposite direction to the US dollar. Aussie, that big push down, popped back up, I think, with dollar weakness. Didn't kick on as hard as you thought. It did come back down once the dollar started to rally, and it's sort of caught between dollar strength for bearish moves and equity strength for bullish moves on the Aussie. So, but either way, all this action, I don't like trading the Aussie as much because it's been really chopping. You want something like this when it starts to expand hard and you can be right quickly. When you get this sort of whippy action, you start to take a breakout trade, it becomes 2-to-1 in the opposite direction. 2 points lost for 1 point gain. It doesn't make sense. That makes sense. Well, it makes sense to you. Whereas this, if you're looking up to this high, it might be 1-to-1. You're risking $1 to make $1. And if it breaks through that, then okay, 2-to-1's on, 3-to-1's on. But when you start to take these breakouts, these big ones, to get up to the high, it might be less than 1-to-1. And it's not getting through the highs. It's just proven itself quite a few times. Got through the highs here, pull back, got through the highs up here, straight down and took out this low. Back up through the highs, this breakout through here, sucker it in, selling, sucker it in again, selling, more selling. And this area broke through this highs, not much at all. So really not convincing on the upside for the Aussie, but it's still holding. Until the equities break down, it's still holding. Commodities, as this US dollar starts to rally or sell off, everything seems still in this holding pattern. Now, crude is, luckily enough, it's been supported by cuts in production, which is good. It's good for the positive, but if they're still showing me that spike down was US dollar strength, another spike down US dollar strength, potentially running out of steam here, maybe starting to roll. It could be kept on the downside because they could just turn around and say, okay, OPEC, we're going to cut more. Right, boys, go out and cut everything, cut production to support price. So it's got those two things that can happen, whereas copper doesn't. It's US dollar based. It's not, cut production where they probably can, but it can't move as fast. They can't be implemented as fast anyway, I wouldn't think. But they just don't really do it. Whereas crude will do that. They'll be manipulating price, trying to manipulate price with production cuts and increases, try to keep price stable. And then you've got the US dollar moves. If it starts to move hard, the market's going to react to that. So it looks like, it may be getting heavy if it can't hold this zone through here, which is what, this zone around 41.50, thereabouts. If it can't hold that zone, and we start to get lower highs pressure, you want a clean break of that, and then there's potential a sell opportunity for a retest of that zone. But otherwise, if it starts to hold it, you need to see these high lows starting to step in. But at the moment, you got some pressure up around here. Previous highs were up here, failed to get there. Tried, sell off, big sell off here, bounce straight back. So the bull, straight back again, and then more selling pressure. So if that US dollar starts to rally, we're expecting more downside on oil. But again, it's just dependent on what happens with the US dollar. I always click that, copper. So look at that selling. So we've spoken about this move up here, took out the previous highs. I think it was there, yep, took out these previous highs with this move up. And we were talking about this, whether it's just going to be a flush out of the level because it's a key level. Everyone knows about it. Everyone can see it. Taken out, it's going to drag in some buyers, but whether it's got the oomph, and I don't ever believe when it comes off such a low base, what you want to see for a break is consolidation. So let me just see if I can draw it, what I'm talking about. There's different things. If you extend, this move up is all one leg. So when it gets up and it doesn't pause and it goes straight through a level, that's an extended leg up. So that to me is not a reason to be buying. I wouldn't want to be buying. So I was edging for a bit of a pullback. We got the pullback. And then if this become a lower high, I think like I was saying, is you would expect further selling pressure to come in, which it did. So now we're going to have to start judging what's going to happen next. So if we're talking about, just like I was saying, say we've got that resistance zone there. For a rally that comes off quite a low and doesn't pause and it's extended up, it does that like copper did. I don't expect that to continue because it's a key level. I expect that to be a flush, especially when you're looking at a key level. If it's just a minor level, yeah, don't worry about it too much. That means something different when it's got a key highs after, like copper's rallied up strong, got to those levels, chopped around, took out some lows and rallied back up to that again. The way it did, I'm looking at this as more of a flush. Now, what I would prefer to see is if you get this, that's fine having that leg up, but you want to see some sort of chopping around below it. I'll draw that better. And consolidation, but that's your anchor up. You want to see this kind of thing, just to squeeze out a few people, bring in some uncertainty with some sellers, and that creates that sellers will start to jump in. And if there's enough sellers jumping in, they can turn around and squeeze them out with a good move up. And that's where I would expect that move up to continue, because it's paused. Any buyers here have been pushed on the sidelines. It's dragged in some sellers, and when it consolidates still above the anchor level and it's just below that resistance zone, and it starts to consolidate, and then you start to hold those high lows again, that to me is going to be what's going to drive it up and through and continue on through that resistance zone. Because all of a sudden, anyone that's got stops on their major sellers, they've got stops above that level, they're going to be thinking twice about that, and there might be enough oomph to then to buy back, and you just charge through that level. So they're the two key scenarios I'll be looking for especially when you're into key support or key resistance. Oh, what happened there? It's disappeared. Wrong one. Okay, so yeah, in saying that, we're just going to see whether this can basically hold this zone at 286, see what copper does. So that, to me, leg up, you've had that pullback. If that's going to be another leg up, it should continue. Potentially, we've got a major double top we're looking at here, in a bigger time frame. and we're starting to get weakness. So it starts to trade down to here. I would expect that broken at 277. But again, it means what is your market's doing, what is US dollar doing. All right, so that's probably the key things I wanted to talk about. So all in all, whether I said anything or not, there's no real clear direction still. It's just what is this news going to do? I think the bullish sentiment is well and truly intact. Trump's never said anything about no more stimulus, which is quite smart. He's tried to pump it up with the plasma, talk of plasma. So he's biased in one direction clearly. It's whether or not this market's going to start believing or continue the ball rolling. So maybe we're waiting to see, well, there's no reason to sell just yet because we haven't talked about stimulus yet. It hasn't yay or nay on stimulus. Now, if they took around and said, and that's why I think Trump he's just stalling. He's stalling. If he doesn't want to put out stimulus like we've mentioned before, he's not going to say it. But if he's agreeing to stimulus, he knows that's going to trigger buying. He will say it. So that's my theory on why he's stalling on that. He wants the market to kick higher. Let's talk up the plasma, and not a vaccine. Don't want to call it a vaccine, but potentially a cure or something along those lines to support the market. But it's whether or not there's enough people on the sidelines willing to throw some more money at this market and continue buying. I mean, there's always going to be somebody, but is there going to drag in some sellers yet or not? Or the sellers just happen to stay, let your retail continue to push higher. See that fear of missing out can continue to push markets higher. If we start to see some cracks, then there could be some selling coming on the board into the markets. So we'll touch on gold before put up some shares. If you want to look at anything you want to take a look at, put that code in the chat and we'll get into it. I've got a couple that I just want to talk about. And then we'll next half an hour, we'll just talk about some ideas, things we're looking at. So anything you want to question, just chuck it into the chat and we'll get into it. So this is gold. This is the 30-minute chart, but I've not seen that as, let's go to the daily. Let's just sort of work our way backwards. The daily had a massive spike up. So it's whether or not that spike up and this pullback is enough to flush out enough people to continue and get another big move up. So to me, if it's going to go from here, it's going to go vertical again. And that's a big ask considering that US dollar is struggling to go lower. And I think gold will need the US dollar to break down through quite convincingly through 92 or 92.50 for this to kick on and take out these highs at 20.76 and take new highs. And it's going to be a spike as well. It's not going to be a constructive pullback with these high lows holding and then nice ease up again. It's not going to be fairly tame. It's going to be another spike if it's going to go from here. So that's why I'm not really on gold. I don't really want to buy it here. If you're just dropping it down a couple of time frames, go to the hourly. That I think when US dollar is moving down, we should have said if gold was going to be bullish, it should have broken out through this top side, but instead it was contained, well and truly contained. So any sort of bullish action was contained on the US dollar fall. But as soon as US dollar started to rally again and took off, we started to get a break to the downside there. So I'm not saying it's bearish, it's just saying the pressure is starting to mount. And if we start to hold this inside level around here, and we start to hold lower highs, there could be easily a breakthrough, or even if you're taking a short, you're looking for shorts. Not that I will, just to be clear, I don't want to short it, don't want to go long, because longer term time frame, longer term trend is still up, holding this uptrend. So any short play on that have to be quite quick, and potentially you're looking for a breakdown here, stop above with a move on the cards down potentially 19.13 and through. But I wouldn't be looking for any big gains. If you happen to get it and it doesn't look back, it just goes straight through, and then you start attacking this low at 18.63, yeah, then you could be looking to open it up a lot. But until this trend up, it could spike down and bounce quite savagely. So if you leave too wide a stop, you're looking for too big a gains, you could be chopped out. You could be right and chopped straight out again quite easily. So in essence, this, to me, shorter term could be down, but I think longer term it's kind of sideways at the moment. I don't want to be buying into gold. I don't want to be selling gold at the moment. All right, so let's get on to something I'm looking at. EOS. You can just see that volume today lifted on the rally. We drop it down a few time frames. We'll go to the half an hour. This little rally had some good volume in it compared to previous days. and it's just taken out this level at 590. Now we might do a bit of back and fill. By back and fill, I mean pull back to the MAs and start to lift. So if we get another lift, this one could start to be a good, buying opportunity because of the daily. The daily's looking good. Daily's holding this inside, so it started to hold. Let's drill in that. You can see we're holding through here, slightly higher levels. Let's draw that up. Okay, draw some pretty pictures. So this kind of action's holding, minor higher levels here. It's all looking okay. But you get that expansion straight back down. So if you're going to buy on a break here, there's a chance that you could come under a lot of heat when it pulls right back. A nice early entry, and actually probably will send an alert for this, potentially break through there, then you've got this level to worry about. If it blows through that, then you're going to be under some good profits. You're going to be looking quite handy when it gets up, if it starts to target these highs, even if it targets this inside level around 7. So that would be, what's it, $1? I can't add 20%, 15% or so if it gets to 7. If you're looking for that break and you've got smaller risk below those lows. So I think it's looking quite good. Got a bit of volume coming in, which is a difference today. With the volume, it just needs to break 6, I would suggest. So we're looking at that one. BGA, I'm looking good still. We sent out an alert on that. Won't talk about that too much. But either way, we've got a good little alert on that one. They've got earnings coming out on Thursday, I think. But it's looking, I mean, I go majorly, well, a lot of my emphasis on technicals. I don't want to hold out just because it's got earnings, because if I'm always skeptical. I mean, it is a skeptic of me. If it's going up, it looks like it's going up, and you've got earnings, I'm potentially thinking that somebody knows something that we don't. They're buying into it. They're expecting good earnings, and they're looking for a good push, and maybe some dividends to throw in the mix. Some good dividends that people are going to buy it up on. And we got in nice and early, get the earnings, and you can look at expansion after that. If it comes out with crappy earnings, we might get caught. But for me, it's just your typical trade. Okay, we've got high lows holding, structure's looking good. I want to buy it. Simple as that. So split it. SPT is another one that looks. I'll just go back. Longer term, we've had this high up at 2, so we had a good run up here. I think we bought it just below $1, got out just below 2. It was 100% all up, I think, roughly. But it was a good little trade, and it's backed off and spent a lot of time doing nothing since. I mean, it's had these runs up, taken out this low, cleared out, back down to where it probably floated. Then we started to get a rally again. So this volume's coming in compared to what we've had. Some good volume expansion. This flag pennant, don't know what to call it, but whatever you want to call it, it's holding these inside levels, and a key now is for around that 135 zone. You can see it's touched it here. Let me just go back in. Touched it in here. No, sorry, here, 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 and here again. So to me, it's ready to lift, and it could be today. I think APT is looking good. All those BNPL stocks are looking good. It could be some bullish moves on that stuff. I'll be trading this if you can get a nice break and targeting a break at 2, then that's what we'll be looking for. So yeah, we'll get on to some other stocks now. So we've got PNR, PPH. From Pete, anything else you want to look at? It doesn't have to be a share, but if there's something that we have a bit of a look at, chuck it in. All right, PNR. It's consolidating right now as high. The good thing is, I mean, that flush of this high, previous high, not so good, but this is good. So you've got to remember, and this is what we always talk about, when we talk about a washout, people get caught, they buy the break, that's all good, but you've got to really know where your anchors to the trend are, because the anchors, if they break, they're going to be the ones that are going to hurt you. That's going to be when you're going to get hurt, sorry. So you can, for instance, what I was saying, if you bought that breakout there, I mean, you've got to know where your stop is, for instance, but that's gone through these highs, I'm guessing. Let's just draw that up. Pantoro. Is that a little goldie, is it? So that there is that high, previous high. So that, like I said, it's got through there, it had the pullback. So if you did a buy and a break there, you're underwater, you probably bought the high, and you're underwater at the moment from when it pulled back to 24, but really the anchor to the uptrend's here. So if this holds, inside level, it's going to start to lift again, especially if it gets up through 26.5, say trades 27, it's got up through there, it's looking bullish again. So you had to weather a bit of heat. So that's why it's important to know where your anchors are, because if you buy here on a break and you've got to stop below, you've been done. If you've got to stop here, you've been done, because the anchor's way down here for that trend up. And until that breaks, that trend is still up. And you just got in really late, in essence. So you've got a very wide stop, if that makes sense. But if this level holds and you start to break down, that's where you're going to get stopped out, I think. And it could retest there and bounce again. It could be sideways for a bit. But that's what I was talking about, just knowing where your anchors are and buying, really refining those entries. To me, you could have been in here on this move, or you could have been in here. I think that's when what I talk about, buying the unknown, not the known. That's the unknown, because it's just starting to lift off this move, bounce up, the secondary move down. So that's where I'd be happy to buy, right? In here, okay, it's starting to become more of the known, but you still got this to combat. As soon as you get up, that kind of action is still quite good. And you've got lift in volume here, good volume on the break. Okay, that supported a move up to 27. You've weathered the storm a bit here. You got back up here, so there might be anyone that's been buying through here and here, especially after the secondary move down, might be thinking twice about holding. So that's why buying on that break with a big stop like that, to me, doesn't make a lot of sense. I would rather see a break through this high, break through the high, not just a little bit, but a good break. And then you might get a better back and fill to hold, and then you're looking for an entry. I think that's a better strategy. I mean, if it goes on without you, I don't care. I'd rather walk away and get something else, trade something else, than falling in love with the stock as such. So yeah, P&R, I mean, it's still at this stage, it's still looking, but I would want to see it hold 23. I need to see it hold 23, and I do need to see it break 27. If it just chops around in between there, these two levels, then if you're holding, you're going to be looking for going, well, it's got to go soon, otherwise I'm selling. And if you're looking to get in new, you'd be going, I'll hold off. So this sort of move in between there, the only people who are really concerned with it are holders, people that hold the stock. All right. And they'll be waiting. So there's all different people have got different risk tolerances. So the more it sticks into that range, there's going to start to creep, and some people are going to go, that's it, I'm getting out. I don't care if it kicks on. I've got it here, or I bought some more here, and I'll look at to book those gains. All right. So unless, and to buy it in that zone up near these highs, I think for anyone, your funds, anyone is going to be a bit risky up near those highs when you failed there twice. You got through it. That's the first failure of this high, because you pop through straight back down again. Second failure when you took out that and the next level by a few cents and you come back down. It's not the kind of pullback you want to see if you want to be bullish. So all that action there, if I'm sitting on the sidelines watching, I'd be thinking twice. I wouldn't want to be. I want to see a nice break of 27, and then I might get in. I could have my stop below, and hopefully it gets up through 29 and keeps going this time. Because the third time up through there, it may just keep going, especially after this action that hasn't broken the anchor. But on the flip side, that holding and a breakdown here, you're probably going to see a break of that anchor. So any good technical analyst would be looking at that going, oh, I don't want to be in just yet. And if I'm in, I want to make sure they've got tight stop on that, because if it breaks through here, I'm guessing it's going to take out that anchor after 1-2 tests, and it's showing me that the bears are starting to creep into it, and it's going to go down through the anchor. I'm out. I'll just get out. And I think that will be a bit of a what do you call it, from a psychological point of view. If you're holding it, that's going to start to hurt. And if you're going to be a buyer, and if you didn't want to jump in here, why would you jump in on a break of 23? And you're just going to step aside completely. So the only one really left to do is to sell. That's the way I view your markets and price action. There's all your different indicators would help, but I think psychology, if you can walk yourself through that process, I think it could really help. Would you want to buy it there? Yes or no, or why? What are you expecting? Where are you going to be wrong? Where are you going to be right? What do you want to see? And most people, if they've been trading long enough, have got some experience on the good side and the bad side, on both sides of the action. And especially if you get caught out a few times, if you can step aside and say, if I was going to buy it here, am I doing something dumb, or is that a good move? It's as simple as that. And if you can honestly say to yourself, oh, it's probably not a good move, you wouldn't be the only one. And if it is a really good move, it's a solid trade, if you can say that to yourself honestly as well, then you wouldn't be the only one saying the same thing. And that's why, walking through yourself through that, it is going to give you a bit more clarity on a trade. All right. And as we're saying, that's probably just ticked off, has it? In a 25. All right. So the other one, I hope that helps, Pete, on that. PPH. See, that's similar scenario in here, but now it's going. But you haven't got the break. We've got to step back. So look at this action. Essentially sideways the last few years. Sideways 2008 was pretty rubbish. 2019, a bit of rubbish too. It popped up, and then we got the big sell-off. It's held. The good thing for me, it's held these lows just below 3, say 250. Rejected it and popped up. This consolidation, really good sign. Don't know why I didn't get into it there, but hey, you make mistakes. Not all the time, by the way. You got that consolidation there, rally. Okay, good, strong move. So after this move, a lot of people talk about gap fills, da-da-da. If it doesn't gap fill and it's consolidating at the highs, it's always important to say if it's consolidating at the highs, that's a strong, good sentiment. Okay. If it starts to creep lower, that's a different scenario. We always talk about that. So you got your move up, you got your top third of the move up, so that's your move up. If it hovers in the top third, that's a good, strong sentiment. Pulls back 50%. It's not a strong sentiment. It's pretty obvious. If it pulls back to the lows, that bottom third of that move up, you want to steer clear. It can keep going, but you've got to ask for more evidence that buyers are going to step back in when you've had a 60% pullback. But you don't need as much evidence when it's hovering around the highs, okay? Because as soon as it starts to break up again, to me, that's strong sentiment. You can see it's took off back to 9. So now we've had a good little pullback, and that's cleared out this low at $8. Cleared her out. I don't like the way it's grinded back up here. And two little things. So I like to work off some good pullbacks, and I want to work off a bit more action than that. So there's a couple of things. We're getting extended up here. I'll draw it up on this chart. So it's going to make it, you're going to be tentative, but there's no reason why it can't get going. So it makes sense. I mean, it's what indicators you use. I mean, from my point of view, I probably wouldn't buy it. The fact that it's gone through 9, you've still got the anchor is down here. That's holding. So you got your leg up, chopped around, held, leg up. Tried to go again, couldn't. Had to take out the leg. That's not an anchor for the uptrend. This is a key anchor. This is more of it. This is the leg up. That's your anchor. Took out, couldn't go. Took out that anchor just to this leg up. So now we've gone in the correction phase again. Potentially this is your anchor at 7. Now that's not an anchor until you get up through that high at 9. All right, so you've got to look at this in respect to this leg up. That's your pullback. Is this going to be the next one up? Where do I want to buy? Where do I want to get out if I'm wrong? Potentially you've had, this move up here, you might have bought. I'd prefer to see a buy through that. So to me, it's gone a bit late. I would have bought, through 775, for instance. That's my high low I'm working off. So in essence, I've got the pullback, got the pop up. We've got taken out this high. You got your high low. So it's starting to be, that's your break. That's what I'm talking about. The breakthrough 775, probably on this candle here. Broke off a higher low, which is this level at around 725. So technically, you're buying when the market's rising. It's off a higher low. Everything's looking good. It's just the action itself is not convincing. Because as soon as we got there, when we did actually get in, for instance, if you got in at 775, it's basically finished at that level. The next day, we'll go here. The next day, now that's your entry. I think it was high at 782. High. Okay, you probably could have got on this one. Next day did nothing. It's starting to lift today, so it's not as convincing, and the volume's starting to reduce, and we're getting extended. So we extended. Last time we extended was up here, and we're up at these highs at 9. So to me, it's going to run out of steam, and there's potentially it's running out, and it could be that we're going to start to hold a key lower high, which would say from that high down to 9 to 7. You extrapolate that out, so it stops at 825. Take off $2 and you're looking at 625. You're looking for a move down here potentially, which could break all your anchors and may not be so good. That makes sense. So if you're long, you've got to realize what you could be facing and adjust your risk accordingly. So I potentially wouldn't buy this. I don't like this kind of move, and it's the period of time. If it's going to go, you want to see, you entered here, you want to see it finish on its highs. I mean, it did, but it really wasn't. It basically finished at these highs. Where did it close? 780, and that high was 782. So it closed that day. It closed 2%, 2 cents. You got in at 85. Say you might have a 2 cent stop loss. You bought it at the high of the day, 82, 84. So yeah, 1 cent off the high of the day. It's closed back down, so you're down slightly. Next day it did nothing. So you should have said to yourself, well, that was positive. I should get everyone else buyers rather than sellers stepping in. And there wasn't enough buyers stepping in. There's still a few sellers stepping in. So not as strong. And it's taken until today. It's just ticked off into a new high to through 8. But again, that's probably on the back of that BNPL positiveness today. News out from APT Afterpay. But we're getting extended. So that's my major concern on this shot. You've come from oversold to overbought. So that's your buying pressure. Buying pressure is running out of steam, but we're not near these highs. And that's not a good thing. Okay, it's not something you technically want to see. It is holding the MAs, holding here. It's a grind up, so it's not giving me too much comfort. I think there's some better things to look at anyway. So we'll see how that goes. But either way, if it does hold, I mean, if I'm wrong completely, and it can stay overbought, you can go sideways. You can start to grind down. The market could still go. Look at it. Here was a bit different. Makes sense. So here, we're overbought here. It's still got up to these highs. So there's still room to move. It doesn't mean anything. It just means the probabilities start to reduce. For me, it's a probability game, really. Jason Nan. All right. Nanosonics. Let's just look at that. Where am I? I'm trying to find. Here we go. And IP1. All right. Nan, a good day today. So bulls are in charge today. 7% up. 6 mil. Yeah, not really a massive increase in volume, but we're only just over halfway through the day. If we start to increase the volume, we start to kick on. It's that kind of move just shows you that there's no sellers willing to stand in. So you get that expansionary candle. It's a good thing. It's just hard to buy after that kind of a candle. I don't like doing that. I'd rather buy anticipating that because of the way I'm reading the market and what I'm seeing prior to that move. So here, 7 could be a bit of an issue, especially after a 7% move, or it may not be. Then you got up to these highs at around 750 thereabouts. Okay, if that's not become an issue, then you've got the highs at 775. Again, if that's not an issue, it's going to take off. But that move down there was that sell off, the fear driven. So maybe that's overextended. We've come in and we've held $6, which is really nice. It's good to see, especially with that. If you can see, this sort of move through that low, took out the low, finished below. Next day, straight back up again. Not a good sign if you're just selling it, or if you're sold, if you're short. Like I say, I know shares don't get shorted as much or it's not as easy as say indices or your currencies and stuff. But if you think of it in terms of sellers and buyers, anyone that's sold into there and then didn't see it kick on is going to be squeezed out. Or if you're on the sidelines, that's going to be a bit of a heads up that, oh, hang on a sec, that's not really weak as I thought. Took out that level. So we traded down to it, bounced up lower high, and in essence, we've got the same thing on the reverse side, popped up, didn't work out, took out this high, sellers still in control, and buyers are stepping in at 6 again, tried to go up, okay, couldn't kick on this time. So then it's gone through that level, but buyers just let it trigger, bang, they've lifted it again, and that's what's driven to this break you would expect today after this washout. And the sellers, 1, 2, 3 times, they've given up. You've got a flush. A flush should have kept going. In their mind, if you're short, it should have kept going. Shouldn't have bounced. Should the next day, instead of green, we should have gone straight down and traded to 560 or so and start to expand on the downside. But instead, you've got through nothing day the next day, this day here, and then the day after that, start to lift. So anyone that's short, you'll be looking at that going, we've tried 3 times. We've defended this level 3 times, gone through, and they've defended it a 3rd time, and it should have kept going. So when they take it to stops, anyone that's bought it and you've got a stop below there, they've been taken out, and there's no follow through from further sellers, but there is follow through from buyers, then you've got a question if you're on the short side, which basically means anyone that's looking to sell again is going to hold back. All right, so you've got sellers are just stepping aside if you're long. New sellers are going, no, I don't want a part of this. So who's left is basically the buying pressure. And buying pressure, that's why you've got this lift up through 660 and it's expanded. So instead of that, if we get a bit of a pullback over a few days and we hold a higher level, then yeah, you're looking for a break up through 7. You're looking towards what happens at 720, and then you're looking towards the highs back up here. What's going to happen there? All right, we'll just see how that goes. Hi there. All right, so we've got, so that was my wife just wandering past. She's doing homeschooling as well. So you can hear us both talking sometimes online. All right, so that's that one. Does that make sense here, Jason? Does it help? And we go to IP, no, that didn't work. One, what's that one? InPay Tech. It's a very low market cap, but it's had some good volume come through. So that, not much to say. That's on the way up. It's potentially this leg up compared to expansion previously. It's probably on the stretched end of that expansion, if that makes sense. Just considering what's, the moves before, good move before we got sellers, another decent move before we got some sellers straight back down again. Okay, buyers lifted up, sellers started to come in. So the moves up are being countered by some good moves down. So if this is kind of an extended move into the previous height around 4.5, we could expect some sellers to come in and do the same thing they did here, here, and here. But ultimately, the trend is up. If we come down to 3.5 and start to hold that level, even slightly higher, like I said before, the higher hold of a run up, if you're pulling back, they're better. Let's just clear that up. So like I was saying, if this is your leg up from there, and we start to do two things, there's the two scenarios. We have this kind of thing in the top third. To me, that's a lot better. That's going to show, well, if I can draw it straight, a lot better strength. And that will take you through that high cleanly, I think, and it's going to expand, potentially like this. But when you get a move down that starts to dribble down a bit lower, sort of in that bottom third, so we're splitting up this, well, not really thirds, is it? Top third, middle third, bottom third. If it sort of hovers around this zone and starts to lift, you just want a bit more confirmation. You want a bit more time to put in the base, high low start to play out, and then potentially jump in. Then I like that kind of action, and then buy on the break of a high low, and then get in. So that could be down towards 3.5. Some strength might be hovering around these highs, but either way, it's holding the MAs up, doing well. Bit extended, like I was saying, 3-year stochastics, the way I'm looking at that. Good volume coming in, so there is some buying support, and sooner or later that might break it for us. If it breaks through there, it could really kick on, and then from there, who knows where it could go. Let's go into a weekly through there, then you haven't really got many. Then you could easily be looking at 10 cents. So what do they do? Don't know. It's worth following though. Information tech, user obtaining process of linking data to payments or service click payment advisor. Okay, so it's in that same area, is it? BNPL. All right. So yeah, look, that's probably about it for today, I think. I hope that helps. I hope there's some good ideas there for you. And we'll just see, just quickly go before we go. So the Hang Seng's backed off, which probably would have expected it. SPY's done the same, and Japan's actually hovering up there. We'll see if that can get another leg up. I wouldn't expect so. You got another 30 minutes on the Hang Seng. So I don't expect that it's going to take out the highs in the next 30 minutes. They tend to, the move's done and it'll consolidate. It'll consolidate around here, coming to 2 o'clock closes for an hour, and then see what happens. Then they're basically looking to what happens at Europe at 4 o'clock. So the good moves are done. So in that 11:15 to 2 session. After that, you tend to be waiting off to see how Europe opens. All right, guys, we'll call it a day there. And then to confirm bullish move, yeah. Nervous. Oh, we all got nervous. If you're not nervous, then it doesn't make it any fun, does it? you're not nervous, you probably do some dumb things. Nerves tend to keep you focused better. All right, guys. Thanks for joining me. Back in tomorrow at 9:40, and just do the quick stream, and we'll see what happens tonight in the US. Like I said, if you like what you hear, it'd be great if you can leave us a like. If you haven't subscribed to YouTube, subscribe. If you haven't looked at our website, uh, www.tradesetup.com.au, please do. And I will have another talk on Spotty. So if you had a look at Spotty, good. If you haven't, just jump on there. I'll see if I can find the link for the talk I've done, and just so you can get an idea of what they do and what they're looking at. But it's worth, it's some good little information. It's some good streams they do. I think I'm back on there the 9th next month, so they come a week or two. But I'll send you out that info prior. All right, guys, have a great day, and then I'll speak to you again tomorrow. Enjoy. Bye.